Good morning. Today is Wednesday, October 2nd, and today I want to go through a few Forex currency pairs with you today. All right, these are daily charts. The first one we're looking at is the Euro US dollar, so EURUSD, and what I'm seeing and what I'm looking to do. All right, first of all, market's trading up here, right? So the market's made new highs. Obviously, the trend is up. As you can see, the bars are all green here. So what I'm looking to do is I'm looking patiently and waiting patiently for the market to pull back between that mid and lower band right in here. So this is support in here. I'd be looking to buy this market down in this area. Of course, this hot pink moving average is the 50 exponential moving average, so it's corresponding with that as well. Let me just show you a nice trade setup, even though it's happened already and it's hindsight, but this is one of the trades that I definitely look for when trading the Forex currencies. This white bar right here, and you've heard me talk about this all the time, is an engulfing pattern, right? It's an outside bar, right? The market, right? The bar took out the prior bar's high and the low was taken out. Now, on this, it closed near the low of that range. Okay, so it's a bearish engulfing pattern. But this green line is a 200 exponential moving average. So what you would normally look to see in here would be, you'd be looking for that bullish outside vertical bar to go long, correct? And you've heard me talk about that a gazillion times, okay? So even though you get a bearish engulfing pattern, if the market is able to take out the high within 2 price bars, that's a screaming buy, okay? Especially, right, when the trend is up. So if the trend is up, the market pulls down into a support area, and you get a bearish engulfing pattern, but the market is able to penetrate up through the high of that bearish engulfing pattern within 2 price bars, that is a buy. So I'll take all this off, start again. This is the bar right here, a bearish engulfing pattern at support, and the market took out the high within 2 price bars. That was the buy right in here where I'm drawing. Beautiful. Okay, now that's happened. Sure, it's hindsight, but it's a great trade. You can learn from that, take it, and learn from something like this, okay? Right now, market's in new highs here in the euro, and again, we're looking for a pullback here. Second market is the US dollar Japanese yen market, and I see absolutely nothing in here. The market's in a trading range, as you can see here. The upper white horizontal line represents the high of the range, and the low of the range here. I would absolutely need to see the market either take out the high of the range or the low of the range and break down through this 200 exponential before looking to sell the market short. The third market I want to look at is the British pound US dollar, and as you can see, this market again is streaming to the upside, right? Taking out the highs here and moving up. I mean, look at all these price bars. That's got some serious momentum behind it. When you've got 3 consecutive price bars trading at or above the upper band, as I'm pointing to here, look at that. The market is got some serious momentum behind it, and so you want to be a buyer on that. But when you see the price bars actually pull outside of that band is when you'd want to be a buyer. That's more of a momentum play. As you can see, you know, when the trend turned from red, right, red bars here, to green in here, you're looking for the market to pull back into a logical area. Where's that logical area, you might ask? Well, between the mid to the lower band, right, as you can see right in here. You can also see that 200 exponential and 50 exponential converging, coming together in here. And that's exactly where the market pulled back to before the market took off. Okay, so again, another pattern to look for. Again, these work tremendously well off of the daily chart of these Forex currency pairs. All right, let's take a look at another one here. We've got the US dollar Swiss franc. And as you can see, the market is broken down through this high here, or this low rather. The trend is obviously down, right? Trend changed from up to down right in here. Look at in here. Isn't this a pattern that I've shown you a million times? Right, you got an inside pattern. This is barely lower than the prior bar's high. All right, this is an outside bar actually. It took out the high, took out the low, and the market's down. So look, we're looking to sell this market here on a pullback into resistance. So on the US dollar Swiss franc, trend is down, looking to sell a rally. And then the Australian dollar, US dollar, has changed. Short-term, okay, short-term trend has changed to up. Now, the longer-term trend is obviously down. As you can see here, the trend changed from up to down right here. So you'd be looking to sell rallies, right? So when these bars are green or red, you're looking to sell the rallies between the mid to upper bands that I have on my chart. So you got multiple plays here. Okay. Now when the market made this low, it left behind what I call an active high here. And so this white bar represents this high, and I drew it across here. Once that was broken to the upside, it took a few bars for the bars to actually turn from red to green. So again, short term. Long term, obviously, the trend is still down. Short term, we've changed up. And again, when the bars turn from red to green, the trend has changed up. So you're immediately looking to buy the market on a pullback between the mid to lower band, right? The lower is the lower blue, mid is the yellow, and as you can see here, the hot pink is a 50 exponential moving average. Well, that already kind of happened. I know I've been going through the E-minis the last couple of weeks, and but again, pull down right into that level. This is a support zone. Your initial stop loss would be placed down in here, and the market's kind of up a little bit. We'll see if this market continue moving higher. Hope that helps. And again, what we looked at today is the Forex currency pairs. You could also look at the Forex futures. Doesn't really matter. Again, I like to use a daily chart when trading the Forex, and quite honestly, the smallest time frame I typically go down to is a 240-minute chart, which is a 4-hour chart. All right. But again, the charts that I've shown you today are of the daily time frame. All right. So hope that helps. Hope you learned a little something. And if you've got any questions, let me know. Have a great day. Have a profitable day. Bye for now.